Euro dollar daily forecast April 25th, fxempire.com. The euro dollar pair rose a bit on Tuesday as the best levels came off. The pair has been choppy to say the least lately, and this action continues to remain so. The trend lately has been for the Europeans and the Asians to sell off the euro while the Americans come in and pick it up. However, something will have to give way sooner or later, and that time for a move could even be today. The Federal Reserve having its announcement in the afternoon part of the U.S. session, there are a few different possibilities going forward. The Fed could announce some type of quantitative easing measures, and this would certainly push this pair higher as the dollar loses some strength. However, this is probably somewhat unlikely, and as such, is probably going to be the least probable of the three scenarios. With the U.S. numbers being better overall lately, more than likely, we will not see this. The Fed, however, could hint at the whole idea of quantitative easing still being in the back burner, at least the thought, and as a result, the markets would probably move a bit higher, but not overly so. After all, maybe isn't the same as a firm commitment, and this is a reasonable outcome from what we have studied. However, there is a third possibility as well, and this one could be interesting. If there's absolutely no mention of easing going forward, or even possible mentions of fears of inflation, this pair will absolutely fall off a cliff. Needless to say, 130 has to give way as it's such an obvious support area, and it will be massive resistance to falling prices. But the fact is that the overall bias still remains to the downside when we look at the overall picture. With this in mind, we believe that this pair will be lower this time next year than it is presently. Overall, we do not like buying euros as there are just simply far too many issues in that part of the world. Because of this, it just doesn't make sense for us to own any assets that is mired in this financial woes that we find. And the bond yields in the EU are warning that it could hit a rough spot soon. Because of this, we sell rallies, and that would definitely include weakness at the top of this triangle that we're trying to form. I'll zoom out so you can see a better look at it. That coincides basically with the 200-day moving average. So rallies will be faded, and needless to say, a daily break below 130 will be absolutely aggressively sold.